Dinar shift is bringing you a crucial development from the global financial arena, a story that many observers in the currency community have discussed for years, and which now appears to be moving from speculation to tangible infrastructure reality. We are witnessing reports suggesting that the Vietnamese Dong has transitioned to a live exchange rate within certain global banking systems, a move that, if confirmed, sends a significant signal about the current financial shifts unfolding across emerging markets. This development isn't just a minor fluctuation on a trading screen. It's being reported as a definitive system-wide update, indicating that central banks and international financial regulators have executed a deep coordination effort. The profound implications of such an event, a long-awaited revaluation, could fundamentally alter the economic landscape for Vietnam, create ripples of change extending all the way to Iraq, and potentially mark a definitive milestone in the year 2025's currency history. The core of this compelling narrative revolves around widespread accounts circulating among financial analysts and currency traders suggesting that a new, significantly adjusted rate for the Vietnamese Dong is now observable and active across major international trading platforms. For those who track global currency movements closely, the visual confirmation of this updated value on internal banking screens represents a monumental turning point. The scale of the reported upward adjustment in the Dong's value is the kind of decisive shift that speaks directly to a complete financial rebalancing, one powerful enough to redefine Vietnam's economic standing across the Asian continent. The persistence of Vietnam's currency at an artificially low value, given the nation's rapid industrial expansion, has long been a subject of economic debate, and these live changes appear to be the powerful, undeniable evidence of that imbalance finally being corrected on the global stage. A currency's official exchange rate is not a figure that shifts by happenstance. It is the calculated result of complex negotiations and simultaneous technical updates orchestrated between a nation's central bank, various global financial bodies, and international settlement systems. Therefore, any report of a new rate being live on global banking systems cannot be dismissed as simple market chatter. It serves as a strong indication that an extensive framework of policy decisions, regulatory sign-offs, and technical implementation has reached its final stage. This alignment is not just local noise. It is a clear institutional-level signal that a much larger, coordinated plan for currency realignment is systematically being rolled out across international financial infrastructure, suggesting a deep-rooted commitment to this financial transition. To fully appreciate the gravity of this reported currency shift, it is essential to contextualize Vietnam's meteoric economic transformation over the past decade. The nation has meticulously cultivated a reputation that has grown far beyond that of a developing economy, establishing itself as a sophisticated, high-volume manufacturing and export powerhouse. Its geographic location, competitive operating costs, and increasingly skilled workforce have made it a preferred production hub for some of the world's most dominant multinational technology corporations. Furthermore, Vietnam has solidified crucial trade relationships, notably strengthening its financial ties with major global economies like the United States, cementing its role as a key player in the global supply chain. This rapid, sustained national economic growth has continuously pressured the previously undervalued status of the Vietnamese Dong. As a nation's productive capacity and international economic leverage expand so dramatically, the prevailing currency value, if it remains intentionally suppressed, eventually becomes unsustainable in the face of true market forces. What these live rate reports signal is likely that moment of systemic correction. It is a necessary financial recalibration. It represents the global financial system's acknowledgement and valuation of Vietnam's substantial economic strength. Should this upward shift in value be confirmed and maintained, it will register as one of the most significant, strategically managed economic adjustments observed globally in recent financial history, firmly placing Vietnam's currency value in alignment with its economic reality. The term going live in the world of high-level global finance carries a specific, technical meaning that is often misunderstood by the public. When insider reports suggest a new rate is live within banking systems, it typically does not imply immediate open market availability for general public exchange at that moment. Instead, it signifies that the updated figures have been rigorously tested, validated, and officially activated within the core internal ledgers and trading platforms, utilized by major financial institutions and privileged interbank networks. It is the final essential stage of technical activation, where the new value is fully integrated into the operating infrastructure. ensuring that all subsequent data, reporting, and settlement protocols are running on the new, adjusted figure. Visualize this process as the moment a complex, high-stakes system upgrade is finished. The new software is installed. The data has been migrated, and the internal servers are communicating on the updated protocol, but the administrative team has yet to formally announce the launch to the general user base. This period between internal activation and public confirmation is characterized by final checks to prevent market volatility and ensure a smooth, managed transition. The report suggesting the Vietnamese Dong's new rate is already live worldwide, therefore may indicate that the final, critical technical switches have been systematically flipped, making full public disclosure and open market availability the next logical and imminent step in this structured process. A currency's official exchange rate is not a figure that shifts by happenstance. It is the calculated result of complex negotiations and simultaneous technical updates orchestrated between a nation's central bank, various global financial bodies, and international settlement systems. Therefore, any report of a new rate being live on global banking systems cannot be dismissed as simple market chatter. It serves as a strong indication that an extensive framework of policy decisions, regulatory sign-offs, and technical implementation has reached its final stage. This alignment is not just local noise. It is a clear institutional-level signal that a much larger, coordinated plan for currency realignment is systematically being rolled out across international financial infrastructure, suggesting a deep-rooted commitment to this financial transition. To fully appreciate the gravity of this reported currency shift, it is essential to contextualize Vietnam's meteoric economic transformation over the past decade. The nation has meticulously cultivated a reputation that has grown far beyond that of a developing economy, establishing itself as a sophisticated, high-volume manufacturing and export powerhouse. Its geographic location, competitive operating costs, and increasingly skilled workforce have made it a preferred production hub for some of the world's most dominant multinational technology corporations. Furthermore, Vietnam has solidified crucial trade relationships, notably strengthening its financial ties with major global economies like the United States, cementing its role as a key player in the global supply chain. This rapid, sustained national economic growth has continuously pressured the previously undervalued status of the Vietnamese Dong. As a nation's productive capacity and international economic leverage expand so dramatically, the prevailing currency value, if it remains intentionally suppressed, eventually becomes unsustainable in the face of true market forces. What these live rate reports signal is likely that moment of systemic correction. It is a necessary financial recalibration. It represents the global financial system's acknowledgement and valuation of Vietnam's substantial economic strength. Should this upward shift in value be confirmed and maintained, it will register as one of the most significant, strategically managed economic adjustments observed globally in recent financial history, firmly placing Vietnam's currency value in alignment with its economic reality. The term going live in the world of high-level global finance carries a specific technical meaning that is often misunderstood by the public. When insider reports suggest a new rate is live within banking systems, it typically does not imply immediate, open market availability for general public exchange at that moment. Instead, it signifies that the updated figures have been rigorously tested, validated, and officially activated within the core internal ledgers and trading platforms, utilized by major financial institutions and privileged interbank networks. It is the final essential stage of technical activation, where the new value is fully integrated into the operating infrastructure, ensuring that all subsequent data, reporting, and settlement protocols are running on the new, adjusted figure. Visualize this process as the moment a complex, high-stakes system upgrade is finished. The new software is installed. The data has been migrated, and the internal servers are communicating on the updated protocol, but the administrative team has yet to formally announce the launch to the general user base. This period between internal activation and public confirmation is characterized by final checks to prevent market volatility and ensure a smooth, managed transition. The reports suggesting the Vietnamese Dong's new rate is already live worldwide, therefore may indicate that the final critical technical switches have been systematically flipped, making full public disclosure and open market availability the next logical and imminent step in this structured process. It is impossible to discuss the dramatic reports about the Vietnamese Dong without immediately drawing a connection to the ongoing conversations surrounding the Iraqi Dinar. For years, These two currencies have been conceptually linked within the global currency community, often mentioned together in discussions about comprehensive, coordinated currency reform efforts in emerging economies. Both nations share a history of economic recovery and rebuilding following periods of sustained political and financial turmoil, leaving their national currencies with an artificially low valuation that many analysts believe is ripe for correction. The reported movement in the dong's rate naturally draws heightened attention to the parallel journey of the dinar. The synchronicity of financial groundwork in both countries further compounds the sense that these shifts are strategically linked rather than coincidental. Iraq has dedicated significant resources to revitalizing its critical oil sector and has concurrently integrated its domestic banking infrastructure with international payment networks, diligently adhering to stringent global compliance requirements. Meanwhile, Vietnam has surged forward, establishing itself as one of Asia's most dynamic and fastest-growing investment destinations. When both the Iraqi Dinar and the Vietnamese Dong appear to be nearing significant currency adjustments around the same time frame, the implication is that these are not isolated market events, but potentially synchronized maneuvers within a broader, international framework designed for the financial realignment of key emerging markets. The pivotal question dominating the current discourse is a matter of timing. Why is this monumental shift manifesting now in 2025? The answer likely lies in the extensive groundwork and systemic preparation undertaken across the global financial landscape. The world is in a rapid transition towards a more digital, transparent, and modernized financial ecosystem, demanding that all participants adhere to increasingly sophisticated standards. Over the last several years, there has been a significant international push for nations to upgrade their core banking technology, embrace new digital financial protocols, and robustly fortify their anti-corruption and transparency measures to meet modern regulatory expectations. Consider the institutional reforms implemented in Vietnam, where the state bank has proactively pioneered advanced, nationwide digital payment systems designed to integrate flawlessly with international financial architectures. Similarly, Iraq's financial institutions have established crucial operational linkages with global clearing systems like SWIFT, and have engaged directly with top-tier international advisors to ensure complete technical compliance. These are not trivial, isolated actions. When a nation completes this level of financial and regulatory overhaul, it is typically establishing the necessary, stable foundation required to manage and sustain a major currency adjustment. The timing, therefore, appears to be the logical culmination of years of deliberate, determined modernization efforts. To grasp the complete picture, one must precisely define what a currency revaluation entails in this context. A revaluation represents an intentional, policy-driven decision by a nation's government and its central bank to formally increase the face value of its national currency relative to other global currencies. This decision is typically not arbitrary. It is a direct reflection of underlying and demonstrable economic strengths, such as substantially increased export performance, bolstered national reserves, and a surge in positive investor confidence on the global stage. Historically, the Vietnamese Dong's suppressed value served to make its exports more competitively priced, fueling its early industrial boom. However, given the present vitality and momentum of Vietnam's booming economy and its established position in global trade, the rationale for keeping the dong deliberately undervalued has significantly diminished. The current movement suggests the nation has reached a natural inflection point, where its financial strength can finally be permitted to reflect its genuine economic power. When a revaluation of this magnitude occurs, its impact transcends the borders of the originating country, sending significant ripples throughout the international economy, subtly influencing global trade dynamics, impacting import costs worldwide, and dramatically reshaping investor sentiment toward emerging markets. It remains essential to approach these dramatic reports with a measured and fact-based perspective, as the currency world has seen similar cycles of intense anticipation before. However, the current situation is reportedly distinct because of the unprecedented scale and apparent synchronization of the updates being observed. We are not seeing isolated data points or rumors confined to a single market. The reports indicate live rate changes are appearing consistently across a multiplicity of major, diverse global financial systems and institutions. When identical data signals emerge from various international infrastructure checkpoints simultaneously, it strongly suggests a profound and coordinated structural alignment is underway. This kind of deep, systemic alignment of financial infrastructure across different geographies and institutional networks simply does not occur spontaneously. It demands meticulous coordination among central banks, regulators, and the world's most sophisticated trading platforms. Therefore, as observers await definitive, public confirmation from official sources, the sheer weight of these pervasive and synchronized internal reports points toward an event of truly significant and coordinated financial restructuring unfolding discreetly behind the public-facing mechanisms of global finance. The potential implications of a confirmed Vietnamese Dong revaluation for ordinary individuals holding the currency could be transformative, yet it necessitates a strategy of absolute patience and disciplined caution. The immediate, most sensible reaction is to remain calm, resist any urge to rush into immediate exchange, and critically disregard any unverified or high-pressure claims encountered on social media or in unofficial online forums. When a financial event of this magnitude achieves official public status, the announcement will be clear, comprehensive, and delivered through the universally accepted channels of licensed, reputable banks and official financial institutions. There will be no need for guesswork or reliance on speculative tips. The information will be globally visible and undeniable. Therefore, maintaining composure, staying meticulously informed through verified sources, and unequivocally avoiding all offers for private or special deal exchanges is the wisest course of action. Any legitimate currency transaction following a revaluation will be processed transparently and securely through established, regulated banking channels. If this event unfolds as the internal reports suggest, it will be a historic moment where informed patience proves to be the definitive winning strategy for those who have followed this development closely. If the year 2025 does indeed mark the moment of a definitive revaluation, it will be the culmination of a decade-long wait for the Vietnamese Dong and the Iraqi Dinar, two currencies often characterized as profoundly undervalued and poised for their natural market correction. The potential ascent of the Dong's value could unlock substantial new national purchasing power for Vietnam, dramatically enhance its international economic standing, and serve as a powerful magnet for massive inflows of sophisticated foreign direct investment. For Iraq, a stronger dinar promises to translate into increased fiscal autonomy, improved economic stability, and greater sovereignty over its colossal oil revenue streams. For both nations, this currency shift would symbolize the beginning of a fundamentally new financial chapter, one that finally acknowledges the robust growth, impressive recovery efforts, and untapped potential they have developed after years of complex national transformation. It is a moment where market value finally reflects national progress, establishing a new foundation for sustainable, long-term financial leadership in their respective regions of the globe. An additional, compelling layer of analysis involves the far-reaching effects of this potential revaluation on the complex, interconnected web of global trade. Vietnam is already a critical supplier across major sectors, including advanced electronics, textiles, and light manufacturing. A strengthening of its currency will inevitably alter its trade equilibrium. Imports will likely become more cost-effective for Vietnamese businesses and consumers, while the pricing of its exports will undergo a necessary market adjustment. Yet given Vietnam's high-quality production standards and its established relationships with global buyers, the nation is well-positioned to seamlessly adapt to these new trade dynamics. Concurrently, international investors will likely begin to reassess Vietnam, viewing it not just as a low-cost manufacturing platform, but as a fully stable, financially mature, and attractive long-term investment partner. The nation's expanding, affluent middle class, coupled with its firm political stability and unwavering commitment to comprehensive financial modernization, collectively present a powerful argument for Vietnam assuming a position of serious, long-term economic leadership within the broader Asian economic architecture. The financial ripple effects of a revaluation of this magnitude extend outward, inevitably influencing neighboring and regional economies. When a major emerging market currency, such as the Vietnamese Dong, executes a powerful upward movement, it frequently prompts surrounding nations to defensively reevaluate and adjust their own exchange rate strategies to maintain crucial trade competitiveness and stability. This could catalyze a sequence of calculated currency adjustments across the entirety of Asia. Furthermore, if the Iraqi dinar is also confirmed to be undergoing its own strategic revaluation, a parallel wave of currency adjustment could be triggered across the Middle East. This dual movement would serve as a powerful, unmistakable signal that developing economies, after years of financial maturation, are finally prepared and positioned to claim their true economic valuation on the world stage. In the view of many long-term financial observers, this synchronized activity may represent the foundational, early stages of what has been extensively discussed as a natural, systematic global financial rebalancing. for the countless individuals who have patiently followed the intricate journey of currency revaluation over a sustained period. Witnessing these reports of undeniable, live institutional shifts is an intensely emotional experience that borders on the surreal. This enduring narrative has been fueled by more than just financial interest. It is a story built on steadfast patience, a profound and quiet belief, and the sheer endurance to navigate years of skepticism and doubt from mainstream financial circles. Many were consistently assured that such a massive currency shift was a financial impossibility that would never materialize. Yet, here we are reportedly observing factual, system-level adjustments in the global financial infrastructure. This moment serves as a potent and tangible reminder that profound, systemic change often requires extensive incubation and is executed quietly, deep within the regulatory and technical backchannels, just before the full public disclosure. For those dedicated to this journey for years, the primary instruction remains one of profound patience and unwavering focus on verified, factual information. In tandem with the emotional context, it is critical to maintain a realistic and grounded expectation of the timeline. Even if the reports of the Vietnamese Dong rate being live internally are entirely accurate, the complete public rollout is highly likely to be a carefully phased and controlled process. Central banks and governments consistently prioritize financial stability, and they manage significant transitions like this through deliberate, measured releases designed to systematically prevent any sudden market shock, volatility, or panic among the general population. Therefore, rather than anticipating an instantaneous overnight miracle scenario, the expectation should be for a methodical and gradual progression of visible, official milestones. Should this revaluation be confirmed as part of a synchronized global strategy, every single step will be expertly managed and executed with painstaking care, ensuring maximum protection and stability for both the global financial system and the citizens of the nations involved. Zooming out to the broader economic context, the entire year of 2025 has been strategically earmarked for major global advancements in digital finance and systemic modernization. An increasing number of nations are exploring or implementing central bank digital currencies, CBDCs, while actively upgrading their cross-border payment mechanisms to reduce reliance on outdated, slower financial architectures. Both Vietnam and Iraq fit perfectly into the center of this powerful, worldwide modernization movement. They have demonstrably spent years aligning their core financial systems with advanced international standards, dramatically improving transparency, and securing positive recognition from key global financial oversight bodies for their measurable progress. The simple fact that both nations are now featuring prominently in headlines for simultaneous currency movement is not a random coincidence. It is the observable, inevitable consequence of years of structured preparation, coordinated reform, and unwavering national determination to achieve financial parity. Should the news reports prove accurate and the Vietnamese Dong's new rate has indeed been activated across global financial systems, it could be interpreted as a powerful symbolic moment, the official start of a new, more equitable era in global finance. For an extended period, the genuine economic potential and inherent value of certain emerging nations have been systematically undervalued or suppressed by previous financial models. We may now be entering a phase where the world's emerging markets are recognized and valued for what they unequivocally are: sophisticated, powerful engines of dynamic growth, continuous innovation, and immense productive capacity. When financial value is distributed more accurately and fairly across the globe, the benefits are universally shared, global trade balances naturally stabilize, debt burdens become more manageable, and the collective possibility of sustainable global prosperity becomes an achievable reality for more people worldwide. For every individual watching this crucial update, the most effective and intelligent response to this potential historic shift is thorough, organized preparation. It is paramount to maintain meticulously organized personal financial information, to stay continuously alert only for official announcements, and above all, to remain absolutely calm and rational. The moment the revaluation achieves its fully public and official status, clear, concise guidance will be readily available from all legitimate and regulated banking channels. It is crucial to filter out the noise of speculation and rumor. Be patient, act intelligently, and be fully prepared to execute thoughtful, well-researched decisions when the decisive moment arrives. This unfolding situation possesses the hallmarks of a truly historic financial event, and the quality of one's measured reaction to it is the single most important factor. Let us conclude with the clearest possible statement. Something of immense financial consequence is reportedly in motion right now. The Vietnamese Dong may have transitioned into an active rate across the most critical global financial infrastructure. The Iraqi Dinar appears to be exhibiting comparable patterns of internal financial readiness. Global trade architecture is showing signs of subtle alignment, and major banking systems are reportedly moving toward synchronization. The necessary components are aligning in a manner that has never been observed with this level of institutional breadth. For many years, the possibility of this exact scenario has been a central point of discussion. Now, all indicators suggest that we are collectively standing on the very edge of this potential becoming a tangible, operational reality. Whether the official public launch occurs today, tomorrow, or in the immediate coming days, this is a moment that demands focused, informed attention, as authentic financial history may be unfolding directly before our eyes. Therefore, to every viewer tuned into this special report, remember the essential strategy: stay absolutely grounded in facts, remain comprehensively informed, and recognize that genuine patience is the ultimate financial virtue in situations of this kind. The most successful participants are not those who panic or rush. They are the individuals who prepare diligently, closely monitor official updates from verifiable sources, trust only established information channels, and completely ignore the sensationalism of hype. If this event is indeed the long-awaited global currency revaluation, its arrival will be undeniably clear and public soon enough. Until then, breathe deeply, maintain your composure, and acknowledge your own dedication for staying focused throughout this lengthy period of anticipation.